Hey guys, welcome back to another Sunday night show, going over some potential trades for this upcoming week. This week I'm drinking Islay Gold. I'm not sure if I'm pronouncing that. It's a scotch. I'm trying to keep it pretty low calorie, watching my weight, aged 10 years. This is actually one of my favorite medium level scotches. I just tried it for the first time. I like it more than Johnny Walker Black, Johnny Walker Green. I even got myself a nice whiskey glass. So, cheers. Anyway, let's go over some trades. What happened last week? We saw a huge drop Monday, where S&P at one point was down 115 points before the rally that started occurring slightly after 3 p.m. And I kind of figured something like this was going to happen at some point, but the real shock was the intense rally back in the afternoon took the S&P basically where it started at the day. The S&P essentially opened about 77 points down on the day, and it closed about 77 points down on the day. I managed to pick up about 50 or 60 ticks of the S&P drop throughout the day by intraday trading, about 4 S&P futures. I also picked up 3 micro mini futures Sunday night. I do trade Sunday nights when I trade futures. It's kind of mandatory to see the Sunday night opening that happens every week at 6 p.m. So one of the downsides about trading futures is you are trading 24/5. And that starts Sunday at 6 p.m. Yeah, it was a lot of action happening Monday, and honestly, up until the 3 p.m. rally, I was a little bit like, is this finally going to happen? Is this the moment? That rally was very strong, managed to cover, not maybe at the best timing, but had good profit overall on the day on Monday. You have to stay nimble. If you're going to be a short seller of this market, take your profits. Do not hold into the rallies. It is best to cover if it starts to rally, potentially reshorting it later. Take your profits, okay? Take your profits with the potential of reshorting later on down the line. So that's just my suggestion. I've always done it to avoid situations where I'm just shorting into massive rallies that never seem to stop. So that's kind of what happened. And throughout the rest of the week, the market bounced back really strong. I honestly did think at one point, like I said before, the market was going to finally break, but we are back in the pattern where every 2 to 4% drop met by buying. So we'll see if this continues. I would be a little cautious. The market might pick up volatility. And the reason I'm saying this is one of the common patterns I look for when the market is potentially going to drop a little bit lower. I'm not saying it's going to crash, you guys. I'm saying volatility is going to pick up and potentially a little bit drip lower. We'll see. Is a lot of S&P future action after hours. If you watch S&P future actions after hours, basically S&P futures, how they trade, these futures kind of indicate where the market's going to open when it does finally open. They, for the most part, trade Monday through Friday and Sunday, essentially the full 24 hours with a 1-hour break. Anyway, the reason I am talking about this is when you see the market's ready to drop or correct or whatever, you can see the after hours volatility on these futures really pick up. These futures were swinging 30 points after hours, Monday, Tuesday, Wednesday, Thursday. There were several days where easily, if it wasn't 30, it was at least 20 points. So huge moves on S&P futures. To the point, I would say, even if you don't trade futures, and I know I've been rambling about futures forever, I would say one of the key trades for this week is just to trade the SPY. There should be enough volatility in SPY for you to make good money on just trading SPY. The same rules apply if breakouts trade, buy on basically sell-offs short. And if you don't want to trade SPY, or if you that's not enough action for you. There are leveraged ETFs you can use. You can use SSO and to buy 2x leverage on S&P, and you can actually short using SDS, where you can short using 2x leverage against the S&P. Gives you a little bit added exposure without having to use your own margin account. Trade-off is, do not hold these stocks, ETFs overnight. They will basically double your exposure either way, with SSO being positive S&P and SDS being negative S&P on the daily. But if you're doing like a week-long trade, it doesn't track it on a daily basis. The math gets complicated, but the bottom line is keep these to day trades, SSO and SDS. But quite frankly, I think you should be fine just sticking to buying SPY or shorting SPY. Hey guys, real quick, I was going through the footage and I realized that I never really explained the added volatility we're seeing in the S&P, and it's been in the news. One, you have the China Evergrande bankruptcy or insolvency. That's kind of a big deal. It could have repercussions throughout the entire economy. We have Jerome Powell also talking about tapering sooner within 2022. But both of those items have been factored in by traders for quite some time. Talks of Evergrande have already been priced in. I mean, not completely, but people were pricing that in for a while. We have the concept that's been thrown out this week by politicians of defaulting on U.S. debt. And quite frankly, that is just insane to me. Mitch McConnell talking about defaulting on U.S. debt is one of the worst bluffs ever. I wouldn't ever even understand how to price something like that in, but that's essentially bluffing in poker, where your cards are already turned up and your opponent knows what you have.
¿Cómo? ¡Ay! Alfredo, pero Alfredo, si le estamos viendo la jugada, Alfredo.
In this case, it is probably one of the worst bluffs in history. It's not going to happen, but I think moments like this, the algos go crazy, and for that reason, we see 20, 30-point swings in S&P futures in the overnight session. So keep that in mind. I wouldn't try to price that into stocks too much. There's a lot of other reasons stocks can correct, but defaulting on U.S. debt, that would be the greatest catastrophe in financial history. Slim pickings this week in regards to trades. Earnings calendar is a little bit light. I have a couple of trading ideas, but quite frankly, they're slim pickings. So right off the bat, stick with AMC. Honestly, there's so much action in this name. It seems to be holding, if it drops to 39, there seems to be rebuying it. I am not going to be shorting this name for a very, very, very long time. Obviously, things could change in the action of a day. But AMC has just so much action. Just watch that. Skip space, maybe look at plug. Palantir might break out. Palantir took a huge dip this week and then fully recovered. So Palantir might be a trade. The other thing that I want to talk about are a couple of other movers. On Friday, we had a huge move on Mrin software, ticker symbol MRIN. This broke above $10. Its last move was back in July, so we could potentially see a continuation of this rally. We could also see a great short opportunity. Regardless, it is a volatile name that you should take a look at, MRIN, okay? Outside of that, we still have a lot of action in ticker symbol IRNT and HLBZ. But for this upcoming week, I would watch MRIN, SPY, and my last suggestion is Tesla. If you're overall a short seller or kind of long biased on the market, Tesla has yet to break above its previous highs. However, it's not that far from it. I think it can go either way. It might be a more volatile way to actually play the market right now. I'm not saying to buy it. I'm not saying to short it. I'm saying to basically follow the tape. It could be a very volatile name. I think this is a stock you want to watch for the week. If you think the market's going to drop, maybe instead of shorting SPY, short Tesla. It's kind of a more volatile way to gain exposure, in my opinion, for this upcoming week. Also, Michael Berry is probably buried in his Tesla short right now because I think he added size after he started to get in the money with his Tesla short. From what I understand, his size add was around 660 cost basis. Tesla's been rallying hardcore. If you're a short seller in the market, this is a very, very tough market to stay short in without adding maneuvers to actually cover into rallies. You have to do that right now. So no point in staying short while the market's rallying or while any stock is rallying. Anyway, so let's go into the earnings. Earnings are slim pickings once again, and I'm kind of scraping at the bottom of the barrel here. Tuesday we have Micron, and honestly, if there's one earnings that you have to watch this week, it is Micron. It's a great name to trade. I would trade it even Monday, even though the earnings is on Tuesday, because a lot of people are going to be repositioning into earnings between Monday, Tuesday. Definitely trade it Wednesday. Wednesday, we have Centos, ticker symbol CTAS. I'd probably watch that, but quite frankly, I'd probably be trading Micron or maybe Mrin instead. Thursday, I would say trade Paychex and Bed Bath & Beyond. Paychex is PAYX and Bed Bath & Beyond is BBBY. That's actually it, you guys. There's nothing else that I really recommend trading. So a couple more things. Hood is actually breaking out a little bit. It's at $44 a share. It had a little bit of a push this week. I'd still watch that. I'm not going to buy Hood, but I am going to trade it. So if it continues to rise, it might be worth paying attention to. If it continues to break out, I'll probably be buying it as a trade intraday. So I mentioned last week my swing trade of the week was Sava. Sava actually did work out pretty well for me. It was kind of like a buy the dip, and it had dipped a lot. I'm gonna say I might be doing the same with DraftKings. I haven't done it yet. I'm gonna watch the tape on Monday. My swing trades tend to be lower in size tremendously because, for all you know, things could drop even further. DraftKings actually sold off pretty big from $60 a share. It's at $51 a share. I might pick up 200 shares just for a swing trade. So other than that, like I said, pretty slim pickings, but with the added volatility on the overall market, trade your SPY and trade your QQQ. And if you're not happy with your exposure to just 1x SPY, you can look at SSO, and you can look at SDS if you're trying to bet against the market right now. With double leveraged ETFs, you have this, I need to do this in a separate video. I can't do this in a Sunday video. You have what they call a decay of value over time. So the tracking only works on a daily basis. It does not work if you stretch it out over a month's worth of time. So SSO will track the S&P with 2x leverage on an intraday basis. It does that very well, and SDS will short 2x leverage on an intraday basis very well. But it doesn't do it when you spread it out over time. I have to go into the reason why on a separate video. There is just, there's some more to it. It's out of scope for this, but I would recommend looking at that. You can also short QQQ if you want. Shorting Nasdaq is a bit more complicated, even though it's a little bit more bloated, just because a lot of these names are, tech is a little bit different, because even in a bad economy, even in bloated valuations, there could be people bidding up the price of tech companies because they might potentially do good in a bad economy. That's for another topic anyway. You can still short QQQ, but I recommend this week with the added volatility in the market, let's pay attention to the market. We had a sell-off, we had a huge rally. Let's see where it goes. It's not anywhere near, S&P is not anywhere near its all-time highs despite the buyback. Let's see if Jerome Powell can single-handedly raise the market all the way back to all-time highs, or to Goldman Sachs call it 4,700 S&P. Anyway, that's it for this week. Trade the market this week. Individual names, once again, pretty slim pickings. Go over what I had mentioned. Maybe take a look at Mrin. And that's it for me, you guys. I'll see you next week.
I just want the money.